All right. So we're to session three, mastering cover calls, leveling up your cover call strategy. So in this session, we're going to really help you with leveling up and not only teaching you the strategy, but showing you how to use this as a system that's really going to help you with moving forward. So again, welcome back. We'll recap again. We've gone through cover calls, how to use them, create passive income, all the way from getting started with some of the terminology and kind of going through what a cover call is in terms of giving someone the option to take some shares from you at a certain date at a certain price, being able to totally control that again, right? Being able to also get into a little bit deeper and picking dividend paying stocks to give you a little bit more security and really just kind of understanding the strategy. So we want to kind of learn or kind of lean into that a little bit, learn how to scale it, build it, and actually turn it into a system. So, first thing we want to do is we want to show you how you can multiply your premiums, right? So we talked about doing cover calls and them being every contract being a multiple of 100 shares. Really, is responsible for 100 shares of a stock. So if you're able to grow your account to a point where you can have 200, 300, 400, 500,000 shares, you can do multiples of 100 contracts or 100 shares in terms of contracts, right? So if you're up to 200 shares, you can sell two contracts. You get up to 500 shares, you can sell five contracts. 1,000 shares, you can do 10 contracts. And really, that's what we want to do, right? We want to continue to grow our account until we're, selling multiple contracts every week, having expirations come in every week, having those premiums coming in every week, getting called out of shares every week. Like really just our account starts to see that explosive growth that we're doing now, right? So we want to multiply our premiums by growing the number of shares that we can control and selling multiple contracts based on those shares. All right, so laddering your expirations. This is another thing that you can do to help you out with kind of staying on top of what you're doing and generating premiums on a weekly basis, right? So you can sell contracts at different expiration dates. So let's say in our example, our XYZ stock again, I've gone from just selling, or purchasing 100 shares to now I'm up to 300 shares, right? So instead of selling those three contracts to all expire on the same date, I can sell one week contract, I can sell a 2 week contract, and I can sell a 3 week contract. And we're doing some things that are going to help us, with our account by doing that, right? So the weekly contract that I sell, right, it's going to expire this following week. It's going to have a smaller premium because I chose a shorter expiration date, but it's going to expire faster so I can, get back to those shares and get going. So let's say the 1 week I don't get called out. I keep that premium. I have those 100 shares. Now I would sell a 3 week because I have the third week one or the second week contract going to expire this week. Then I'll have the third one, so I can just keep laddering them, keep pushing it out. The second contract, right, it's going to be in the middle. I'm gonna have a little bit of a higher premium, but also going to have a little bit of a longer expiration date, but not as long as the third one. So those shares will, if I get called out or if I don't get called out, that contract will expire. Then I have those shares and I can go ahead and roll it out. Then the third week contract, so I sell one for the third week, I'm going to get the highest premium for that. So higher guaranteed money, but I'm going to have a higher probability of being called out, which is fine, taking those capital gains. And then I have those shares. So if we ladder our expiration dates, we're giving ourselves different ways to generate income and different ways to play the stock, right? I'm playing one quick, I'm playing one mid, I'm playing one long. I'm getting different premiums for each, but I'm getting access to my shares a little bit quicker with some of them and a little bit longer with some of them, but I'm locking in a higher premium. So you're going to have weekly payouts this way, right? Because you have something expiring every week. And you're going to be able to see how that stock is going, every week as you continue to roll it out. So if I have 300 shares, the first time I sell the calls, I'm going to have three different expirations, but then I have one expiring every week, and I'll just keep rolling it out 3 weeks after that. So that's how we can help ourselves with kind of generating that system. And if you have multiple stocks where you have multiples of 100 shares, you can do this on multiple stocks as well. All right. So reinvesting the premium. So this is a huge thing in our program when it comes to the Flex Financial program here and what we do in terms of growing our accounts. We want to use those cash premiums to buy more shares, right? So one thing I like to do is I like to use those shares or use those premiums to buy shares of long-term investments, right? So I have, stocks that I've been holding. I'm looking to hold 3 to 5 years or longer, and those cash premiums allow me to buy more shares of those long-term holds. And I like to do that, depending on where the stock is. There are certain entry points that I like to use that. And then also I like to use the premiums to gradually grow to another multiple of 100 shares so I can buy more shares and write more covered calls. So those premiums are going to be reinvested into our account. That's going to allow us to grow our account even faster, right? So that 3 to 5% as our account grows is going to continue to grow. And so we're going to have more cash on hand. We're going to be able to do more things. So remember, we want to use those cash premiums that we're bringing in to grow our account, to buy more shares, to reinvest. Now, one of the things we want to do is we want to focus on Dow dividend paying stocks as our long-term investments as well, right? So as we're investing in companies, we're growing our long-term holds. Those companies that pay dividends are going to not only give us growth over the long term, they're also going to give us dividends. So we're taking in residual income and we're growing our account with stable companies that are not going to be, driven by every whim in the market, right? So we talked about having some more security because our big institutions, right, our hedge funds, our insurance companies, things like that, they're going to be incentivized to stay in those companies that pay dividends. So that's going to help us in the long term because those shares are not going to drop as fast when there are downturns in the market, and they're going to retrace faster when the market starts to get back to, moving forward. So two things we want to keep in mind. Again, use those cash premiums to reinvest into our account. And two, look at Dow dividend paying stocks. Also looking at S&P, there's some great companies there, but those are going to be companies that you can invest in that are going to be solid. And there's a lot to look at. You don't have to worry about, feeling like there's not a lot of companies out there. All right. So we also want to manage our portfolios, right? So we want to track our expirations and premiums. So again, we have a tracker that we use here, but also you want to make sure that you're taking into account everything you're putting in, everything that's coming out. So we're tracking our expiration dates, we're tracking our cost basis, we're tracking our premiums. We know exactly where we are in every trade. We want to use tools like Yahoo Finance. It's free. You can study any stock there. You can go in, you can take a look at the charts, take a look at the top line revenue. There's other tools out there. We really like Yahoo Finance. Brokers Dashboards is another one. And then you want to do your weekly check-ins, right? You want to make sure that you're checking on your portfolio, make sure that you're checking in on your trades, especially your cover calls. Are you getting called out? Are they going to expiration? Are you going to continue to hold the shares and need to go ahead and do another cover call? So we want to make sure we're tracking all that, make sure you're paying attention, and that'll give you the best success. We also want to automate the strategy, right? So there's different tools within your trading platform that are going to allow you to do some automation. So you can use alerts for setting your strike prices. You can set limit orders for your covered calls. You can consider paper trading before going live, right? So if you've never done a covered call, one thing we do recommend is going in and using your paper trading account to get some practice in trading before. But make sure you're using your alerts, right? If you want to use alerts to make sure where your strike prices are at, you can do that. And, setting limit orders for your calls to make sure they're not getting triggered until they hit your limit. So those are some things to keep an eye on and utilize as well. Now, the power of compounding, right? So we talked about reinvesting your premiums, and that's a very big thing within the program. But if you think about as you continue to reinvest your premiums, you continue to grow your account, you continue to have more capital. Now you can buy more shares. Now you're growing the multiples of 100s that you're working with. Now you're trading more contracts. Now you're getting more premiums. Now you're growing your account faster. Now you're getting to multiples of 100 even faster. So this is how you're going to compound your account. And not only doing that, but also using those funds to build your long-term investments that you're holding as well. This is just going to be a great way to really see some explosive growth in your account. So make sure you're not just, as soon as you get those premiums, you're taking out your account, buying clothes, buying shoes that we're all guilty of, but make sure you're using a good portion of this money to reinvest into your account. And then dividends plus premiums plus capital gains equal true wealth, right? So if we think about all of these different things that we now have going on in our account, right? We're buying 100 shares, we're selling cover calls, we're getting the premiums from doing that. We're getting that on a weekly basis, premiums coming into our account. We're trading solid companies that we've done the research on that pay dividends. So the companies are growing. We're also getting dividends. So we're getting that capital gains, plus we're getting the dividends. And if we're getting called out because these stocks are growing, all of these things hitting our account at once, that's where we're going to see that explosive growth. And we're going to start to get to some real true wealth, right? If you think about wherever you are right now, it doesn't matter what you have in your account. If you started today generating 3 to 5% of your account base balance every single month, and you did that for year on year on year, where would you be in a few years? So that's kind of the mindset you want to have. What can you do in terms of growing your account? If you're starting to add those premiums, you're starting to add those dividends, you're starting to add those capital gains, and you're doing this like clockwork every single month, this is where you're going to start to see the power in your account and really start to build some wealth here. So final thoughts, covered calls are my favorite trade. I love cover calls. It's been really a game changer for me. One of the things that allowed us to get into creating the Flex Financial Trading Group and kind of sharing this with other people. It's a key staple of what we do. Is really because it offers a lot of control, right? I know exactly where I'm selling these calls. So I know the expiration date. I know the premium I'm taking in. I know the strike price. I get to select it all. I know how much money I'm going to make. It's consistent, right? I know it's coming in every week and it's scalable, right? Because I'm bringing in those premiums, I can grow my account and I know I'm getting that 3 to 5% every month. That's going to help me continue to grow my account and everyone that uses this, right? So that's one of the great things about this. Again, the control that you get, the consistency, the scalability, practice, again, we talk about practicing using the paper money account, tracking your results, making sure you know exactly what you're doing every single week, every single month, and adjust, right? If you are in stocks that have taken a turn, or if you've picked stocks, without doing the research correctly, right? You can always adjust. If you need to go longer expiration dates because the stock's kind of tailed off a little bit, or things go on a run and you need to shorten your expiration dates, go a little further out of the money. Just make sure we're tracking everything so we can adjust. And finally, I just want to say congratulations for completing this series on cover calls. This is a great trade. Make sure you go back if you need to watch these again. But once you implement these, you are really going to see your account take off. Also, if you have any questions, let us know. But we will see you on the next module. And thanks again for watching. Have a good one.